Good afternoon, everyone. My name is Elizabeth Cross-Nickel, and I'm delighted to be here hosting on behalf of John Seacrest, who is just in the air flying back from having been in Europe for a number of months, visiting some of our entrepreneurs and investors and investor groups that we work with to broaden our outreach for developing strong entrepreneurs and fostering investors into this angel investing network. Angel investing is an exciting place to be. We call it patient capital because it sometimes takes a little bit longer. We call it mentor capital because people have the opportunity to not only make a relationship with the companies, but with the technology or with the concepts, or to make an impact in the community. And all of you are angels to be driving that forward, or entrepreneurs with an initiative to try and make yourself more appealing also to investors. This topic is very dear to my heart because I really think we're talking about ESG investing and the impacts that are needed at a systemic country, global, systemic, national, local, and individual level, and the impact that investing groups or individual investors can have on this. Our guest today is Shivam Kishore, and I'm going to let Shivam do a little bit more introduction, but I'd like to tell you a little bit about him and where our paths cross. Shivam is was a consultant for Ernst & Young and Deloitte. So my alma mater is Ernst & Young, so we have that in common. He's in the city of Vancouver, and I am Canadian, and so we have that in common. And he's very interested in economic development. He's taking it from a very broader global aspect, and we're doing investor relationship management at a more local level, but the two are totally synced to make a change. So the UN has been really working on developing a position paper on this. And so right now, Shivam is actually working for the United Nations Environment Program. And we're going to hear a little bit about the initiatives that are taken there. We also want to hear a little bit about his other background, why this became a passion for him. And in addition, you came to this talk to raise some questions that you might have yourself and how you can participate. So we're going to start this by just having an opportunity to do a quick introduction of everybody in the crowd. 1 or 2 sentences max. Just tell you a little bit about what you're working on and how it relates to this topic of regenerative capital. I am an investor with Seattle Angel Conference. I also run the APIS Health Angels program, and I have been helping in the transatlantic on a minor way with Ashtik and John. So that's my background, but I also have a startup that's looking at how to provide better care to all the patients who have cardiac arrest. And that's my focus from a entrepreneur standpoint. That's how I got into this. Okay, then Shivam, I'm going to come to you. So I gave a little bit of background before. Oh, sorry. Was someone else speaking? Okay, I gave a little bit of background but I really want you to tell us a little bit about your story. I know what you're going to talk about now, but how did you actually get to where it is that you're at this stage, and what was your burning passion to get into talking about regenerative capital? And maybe you actually have to define regenerative capital first and then work backwards into it. I'll let you take it from here.
Thank you, Elizabeth. It's so nice to meet you all, and thank you again for taking the afternoon. It's my pleasure to be here and have this conversation with you all. My story, I think maybe I can start with where I am now and maybe draw some boundaries, because, you know, often at times I've seen over the last year that I've been working with the UN, that if I say I'm working with the UN, it's like, oh my God, are you doing this and this and this? And there's a lot that the UN is doing, but I'm particularly working with the United Nations Environment Program, which is one of the oldest UN agencies, particularly focused on 3 things: supporting the global sort of conversation in different countries with their climate, pollution, and nature understanding. So how do we start, or how do we better inform policy decisions and otherwise along the climate, nature, and pollution goals. So a lot of work that we do is around working with member states, gathering the right data, and using that data to help inform better decisions. So the member states can make better informed decisions on how to deal with these things. Now, of course, as you can imagine, over the last 10 or so years, the urgency of the work has gotten a lot more exciting because of climate change in particular has really brought forward the need of better understandings of how do these different impacts play out on a day-to-day basis for the different countries, and what do the different countries need to do today to be better informed for tomorrow. So that's sort of where I fit, or where my teams fit within the unit. But my particular role, or my team's particular role within this environment, is to support the digitalization or digital transformation of UNEP as an entity. So it's a very ambitious project where what we are trying to do is make UNEP a more digitally mature organization. And our whole intention behind doing that is so that we can better inform the governments again and serve them better in making better decisions. So by leveraging technology in intelligent ways, by integrating data in intelligent ways, we are hoping that we can support the member states better. So that's the whole initiative. And the other side to that is, how do we start a global conversation to re-inform the use of technology for more sustainable outcomes? So how do we work with the financial ecosystem as one key stakeholder so that they can start to better understand the societal and environmental impacts of the different technologies, and how does that impact the lending rates? How does that impact the relationship with how they fund the different technology ecosystem members? And then working with the technology ecosystem to help them get a bit more mature on how do they contribute to the societal and environmental impact in addition to the economic impact. That's sort of the two hats that I'm playing with. It's very exciting. My day-to-day role is really just engaging in a lot of conversations, strategizing, coming up with ideas, and then working with a very intelligent team to bring those concepts to fruition. My journey has been a bit interesting. If you can tell by my accent, it's a bit of a funny one, but I'm originally from South Africa. That's sort of my home country, or my country of my birth. I would call Canada my adopted country. So it's the country that adopted me in the best of ways, and I'm very grateful for that. I've been here for about almost 18, 20 years now, so I'm very much a Canadian. I can jump in cold lakes. That's my sign that I'm a Canadian now. I think it's always, in the summer when I came here, I could not even touch the lakes, but now I can go for a swim and have a nice time. And I'm like, I've become officially Canadian now. So that's sort of the way I take it. And it's been a lovely journey. In addition to my role with the UN, I'm also, me and my wife both, we're also investors. We invest in early stage organizations, largely interested or largely focused on the emerging markets, Africa, Asia, and with the focus on deurbanization and rural development, focused on energy and education. That's sort of the intersection and the verticals that we align ourselves with. So just do a little bit of background how I got here, why I'm interested in this topic outside my work, of course, which demands it. It's a bit of a personal story. So, many years ago, me and my wife ran a care center. We still run it. Years ago, I was visiting one of the care centers. It's for kids, and the whole idea behind the care center is to give access to education to kids from underprivileged backgrounds, to ensure that their future is not dictated by their postal codes or by the passports that they hold. I come from a largely inequitable background. I grew up in the country of South Africa, so not the most equitable place to grow. And I was very lucky to get access to the opportunities that I got. And so that was one of the big parts of me, was giving back. And so I went to the care center many years ago. It's about 8-10 years ago. And I was engaging with one of the children. We had gotten them new iPads as a part of an initiative to get them access to the global understanding and the global knowledge base. We wanted to give them iPads and get them teaching sort of through iPad as a medium so they can access the web and all the beauty that the web has to offer. One of the kids comes up to me and he says, this is great. I've never seen a functioning iPad before. And that comment was quite surprising to me. I'm like, what do you mean a functioning iPad? Like, yeah, I've played with many iPads, but none of them work. I'm like, where have you come across iPads that don't work? And he said, if you walk with me, I'll take you where I've seen them. And he like please, because now I'm very intrigued at this point. I am very curious to know, where has this kid seen all these iPads that are supposedly non-functioning? And we walk about 20 minutes away and there's a massive heap of e-waste. And it's a dump site that hosts or sort of really collects large amounts of e-waste from across the world. It gets there, and a lot of the kids in the neighborhood actually go there to just harvest whatever metals or parts they can harvest and play around. It becomes like a toy situation for them, really. And so he shows me, yeah, there's like thousands of iPads here that are unused, but they don't work. I've just seen them as devices before, and that really stuck in my head. There, you know, growing up, I had seen these things, but to hear that from a child's perspective 20 years later, 30 years later, was quite startling. And that got me thinking about the impact that digital technologies, that technology in general, is having on our planet. Where on one side, it is a medium to the knowledge base of the world. It allows us to engage in conversations that we could otherwise never have. Me and you are talking today thanks to technologies. You know, we have got the entire database on the palm of our fingertips. But you know, but on the other hand, it has created a lot of problems: misinformation, e-waste. Its own emissions are a big challenge. And so all these things started getting into my head, and through that narrative, we started really sort of thinking about, how do we, as personal investors, and also through my professional work, can we progress this conversation of how do we start to change the ecosystem so we can think about environment and social while generating economic returns. And oh, Elizabeth, you're on mute.
Could I pause for just a quick question?
Yes.
Because Sheila's asked this, where was that e-waste place? And I want to share that I actually have been in countries where we took all kinds of health technology because we thought people would use, and the story could have been the same. Vietnam was one particular place, but could you just tell us where that locale was again?
Totally. So this place was outside a small township in South Africa called Randburg. It's just outside there. So it's sort of, that's the area. It's getting better now. Over the last 8-9 years, situations have improved, things have gotten better, but it is still a concern. In very many parts of the emerging markets, all of our collective e-waste from the mature markets largely ends up there. And so that's still a concern. It's an ongoing concern.
Yes, thank you for clarifying that. And as I said, you know, that almost could have been many other locales where the same thing. In fact, actually, I have a little bit of an e-waste pile myself right over here, but okay. I'll let you go on.
No, yeah, please, that's excellent. And yeah, so that sort of, you know, got us to a point of thinking, well, how do we start to use our capital for better, right? And better, not just supporting clean technologies, because that's extremely important. We need to reduce our emissions, but also how do we largely start to use the capital to create a new ecosystem, to create a thriving ecosystem that is generating economic returns, because that's important for the economy, but also at the same time doing better for the environment and for the society. And that got us thinking about ESG and regenerative capital. And that, of course, intersected nicely with the work now that I'm doing with the UN. So it's sort of personal, professional connected. And here I am talking to you about this very passionate topic. I might not have all the answers. It might surface more questions, but I'm hoping that this sort of conversation between us serves as a starting point for entrepreneurs and for investors alike to get thinking about what are some of the things we need to start collectively undertaking to progress a better investment and entrepreneurship ecosystem that supports the planet, people, and the society. And so that's sort of the narrative, that's the regenerative capital. I'll sort of get back to the definition of how we understand it. But maybe just to give you an overview, so I think, like I said, the whole sort of conversation that I framed is largely first, maybe I would like to take an opportunity to introduce to you the idea of what ESG is and the principles. I know many of you are familiar, but just a quick refresher on how we are seeing it, both from a UN perspective, but also personally. Then we'll just talk a little bit about the value creation for businesses and opportunities that ESG offers, diving a little bit into the investing and regenerative capital, and then what do we need to do going forward. And I was chatting with Elizabeth before. I think these conversations are always better when they're more of a dialogue. I'm personally not a big fan of one-way presentation. So if you've got questions or if you've got ideas that you can augment this with, please stop me and add and ask. I think it's always better that way. So then just starting with the introduction. So, for a very long time, there's a moralistic view to ESG, and there's a bit more tactical, operational, and practical view to ESG. So being a corporate hippie, if I can call myself that, I'm very much in sync with the moralistic ideas, and all of us are practically. I mean, none of us can deny access to clean water, clean air, access to social equity is all important. We all abide by and large by those values and want to live by them. But I felt that when talking about these ideas to the financial ecosystem, moralities can often take a little bit off a side seat, if not a back seat, at least a side seat. And so I wanted to think about it from a more financial, practical, tactical standpoint. And that got to me, and that sort of presented itself as an opportunity for me to present this idea as a risk and opportunity. So the way I have viewed ESG, and I'm viewing the concepts of ESG more and more, is just that. It's basically a risk and an opportunity. So traditionally, we have understood risk in a certain way, largely around economic sense. If you're an investor or if you're an entrepreneur, you understand risk to be how do I sort of, from an investor, how do I ensure that I mitigate risk to be my economic benefit that I'm getting back? For an entrepreneur, it's about managing your bottom lines or getting sort of more clients or more products out, so that again, from a bottom line perspective, ESG expands those definitions of how we understand risks and opportunities. And in expanding those ideas of risks and opportunities, it has the potential to change how we make decisions because it expands our understanding of what we need to make those decisions. And those risks largely showcase themselves along operational, legal sort of frameworks and transition ones. And that's because of key environmental and social sort of upheavals that have taken place over the last couple of decades. They've been happening slowly, but they've really accelerated over the last 2 decades. I think climate change, no surprise to anyone. We need to lower emissions down. We are hoping for net zero by 2030. Otherwise, the warming continues, and the wildfires and the droughts only accelerate. And the social inequities, it's again no surprise to anyone, or it should not come as a surprise, that the income equality in the US is the highest of all G7 nations. And it has largely worsened over the last 5 years. The wealth gap, again, top 10% of Americans nearly hold about 70% of the wealth, which is up from about 61% at the end of 1989. That shows, again, the wealth concentration and the inequity in the wealth gap that is surfacing. And all these different upheavals in our society are presenting new risks to businesses, to investors, to the financial systems that we need to account for, because these risks are increasing the likelihood of global financial instability. We are starting to see some of the effects today. When COVID hit, there was a risk that wasn't taken into account by many businesses and the financial systems alike. We had to adapt in a very short time, and that presented itself in a very interesting way that caused a lot of pain to a lot of people. And so the key sort of high level risks that I would like to categorize that are happening that we need to take account for are the operational, the transition, and the legal risks. Now, how do these risks create value? Or how does ESG add value when thinking about these risks? So if we start to think about these risks as new risks, in addition to the financial ones that we have traditionally thought of, ESG offers certain important considerations. By incorporating environmental and social concerns into the way we operate as organizations or as financial entities, there are a few things that happen. First, the most important one is we start to really reduce our operational costs, right? By making sure that our systems are better prepared for adversity, our operation efficiency increases. And so as organizations, our operational costs start to come down by making sure we're investing properly in our people, which is the S aspect of the ESG. We start to realize that our employee productivity is increasing by making sure that we are taking care of our emissions, we start to proactively bypass or meet some of the legal regulatory environments that are being put forward by the different countries, by the federal, national, and municipal governments. And through that, what starts to happen then is we start to optimize our investments and our capital expenditures. And what that all equates to is better returns financially. So the linear equation that I like to think of in this regard is really around. Sorry, can you hear me? I think you all froze for a second for me. No.
We can
still hear you, no problem.
Perfect.
Thanks.
Yeah, so the linear equation that I like to think of in this regard is new risks. ESG is a way to manage those risks better. And by managing those risks better, mean better financial stability and higher returns on equity and capital. That's sort of the linear equation that sort of starts to emerge as we start to think about ESG from a risk mitigation perspective. And there are multiple data points that start to point towards these different considerations. So companies that perform well on ESG are generally risky, of course, because they're better managing risk. They're better positioned for long-term and possibly better prepared for uncertainty because they've taken into account a more diverse range of risks than traditional companies would allow for. And there are multiple data points, like I was saying, that point to this fact. So there was an analysis conducted by New York University, more than 1,000 research paper that really wanted to look at what is the linkages between ESG and financial performance of organizations, right? And because, of course, in the end, if you're doing all these things, but unable to yield a financial return that is viable and sustainable, it gets a difficult proposition to make the business case for. And what they found was a very strong correlation, very strong correlation between better ESG performance, i.e. organizations that undertake or incorporate ESG as a part of their operating system, generally have better operational metrics such as return on investment and their stock prices and their capital optimization. So that's good for a triple bottom line. So it's good for the financial return, but it also benefits the environment and the society as a side effect, which I think, again, from a moralistic standpoint, collectively, we all agree is a good thing. Hopefully, I would say at least. This is another sort of study that was done by McKinsey, and I sort of have not had the chance to cite all these sources and inspirations for my talk, but I will do that once I share the slides. So you'll have these slides with proper citations. But just to show you another, the McKinsey study that was done, again, they did an overview of about 2,000 organizations across, just looking at the impact of ESG propositions on the equity returns, and 63% were a positive correlation, which means there's a strong indication that incorporating ESG performance and ESG mindset is yielding better returns for organizations. So what does this mean? So we've spoken about organizations, but what does this mean for capital? What does this mean for investors, for people like me, you, and the wider financial ecosystem? I believe that early stage capital has a very unique opportunity to accelerate the growth of the companies of the future. And that's not only with the very valuable, like Elizabeth said, angel capital that we put forward, but also by providing the guidance as the organizations and the ventures scale. And by incorporating ESG considerations earlier in the capital lifecycle, helps organizations or our ventures manage risks better for the future. Which again, thinking on those linear times, they're able to manage risks better, they're able to realize certain efficiencies for the better, yielding better returns on equity and society and the environment. So this is sort of an easy depiction where, you know, early stage capital can inform ESG metrics and performance for the venture, and over the long term, that then comes back in the form of enhanced financial returns plus the societal and environmental benefits. Which brings me to what regenerative capital means, is really investment practices that aim to generate financial returns while having a positive impact on the environment, society, and governance issues. And I'm very vocal about it personally, professionally, but I also think personally, I do think it's quite important that investors be more vocal about what business models they're investing in, and why. And we all sort of need to take responsibility of setting out frameworks on how do we need to incorporate environmental and social considerations in what we're investing and why we're investing. So now that sort of, with that overview, I just want to sort of progress a bit more into some of the considerations, because it sounds all lovely, but you know, in my own personal experience, it's much harder to incorporate than it calls for. So admittedly, of course, you know, at the early stage of the life cycles of organizations, it is very difficult for investors to help early stage companies implement ESG measures, especially when at early stages, entrepreneurs are still fine-tuning their business models. You know, the emphasis on where the time and the energy needs to be spent could, of course, be on business development, could be on risk management, could be on fundraising. And so now to go to them and say, hey, you also now need to think about ESG, because if not, it's going to be a problem. It can be a rather complicated undertaking. So there are certain constraints that are a bit more evident in the early stages of the capital investment process that makes it a bit harder to have the ESG conversation. But I do think there are certain considerations that if we collectively start to undertake, we can make some shifts. And that sort of starts with the onus on investors to incorporate ESG integration within their own investment models and business models. And I'd like to focus on three things: so due diligence, valuation, and term sheets and monitoring. So due diligence, of course, I mean, as investors or as companies who are undergoing an investment process, I mean, due diligence is a very standard process. Historically, you know, due diligence is focused on certain things, largely again on the economy. But I feel like certain questions, if we start to ask other due diligence process, can start to shift the conversation for the better. And some of these questions could be, to what extent does the venture's business model contribute towards the resolution of a material ESG challenge in its industry? And I want to highlight in its industry in capital and really zoom in on that, because allowing ventures to really think about environmental and social and governance constraints or considerations within the environment that they operate in is extremely important. A gentleman here runs a fishery business. If I request the gentleman here to say, hey, you need to think about ESG considerations in the forestry industry, it's going to be a bit more difficult proposition. So really, I think working with the ventures and the entrepreneurs in the industry they're in and helping them think about ESG considerations in their field of expertise is critically important. That allows for a lot more success. The second thing is, to what extent is the startup solution unique, innovative, and scale, while considering the environmental and social impact? And lastly, how is sustainable is the opportunity given ESG trends, and how easily could the solution be replicated? And replicability is important because while traditionally we are focused, I mean, of course, competitive advantage is a thing, but in the world of ESG, if the opportunity arises to hold hands on having better environmental and social impacts, the aptitude, the volume of the impact that can be had is a lot larger. So that consideration can play itself out quite nicely. The second thing that I think investors in start to focus is the valuation phases. Now, you know, the valuation is largely, again, in traditional ways of being largely focused on the economic, financial, bottom line driven returns. But I think there's an opportunity to really think about how does the valuation strongly reflect the social and environmental impact that startups with a very robust laid out ESG factors can generate in the long and the medium term. And then benchmarking comparable sort of metrics across the different ESG oriented startups is critical. Right now, that infrastructure is in its infancy. It's starting to mature, but again, I think it's a collective undertaking because we're in the process of defining a new paradigm of investing and creating businesses. So I think it's up to all of us to sort of start that conversation. I think the final conversation is around, I think, term sheets, monitoring, and metrics. I think is quite important. You know, so term sheets are a standard part for the end of the investment deal flow. And really, the opportunity that presents to me is can we fully integrate ESG into the term sheets? And I think as investors, I found that we shouldn't be afraid to engage with startups directly on ESG issues and help collectively come up with an engagement plan. as a part of the term sheets process, and identifying again the priority ESG factors within the context of the startup's expertise and their geographical expertise is quite important, because it allows for enhanced impact and enhanced sort of value adds. I think sort of with those considerations, I think, you know, being a first mover as an ESG oriented fund or an investor can become a competitive advantage, because it helps to attract firms and ventures that are in that mindset. And that creates a reinforcement cycle, which I think is the way forward. Because again, it should come as no surprise that majority of the workforce today, entrepreneurs and the individuals who are supporting those entrepreneurs scale and grow, are increasingly of the mindset that we need to pay enhanced or more attention to the environment and the society. And if the financial markets reposition their mindsets to support and amplify that mindset, I think we can create a reinforcement cycle where we fuel and encourage startups to grow with that mindset, to have better societal, environmental, and economic impact, which then again regenerates a certain kind of capital with a certain kind of impact. That sort of creates that regenerative reinforcement cycle that benefits all. Which I think leads to a very important conclusion for me, that the very purpose of the venture industry needs to take on a new and ambitious goal. For a very long time, it's largely been quick returns and a lot of growth and scale, and that has benefited a lot of people, but it's also come at a very great cost. I think the opportunity is quite ripe to redefine it and to fund business models that complement the efforts towards a more sustainable and inclusive future that again focuses on economic growth, but equally on societal and environmental growth. I encourage you all to be a part of it. I'm certainly quite vested and quite deeply passionate about it. And I thank you for your time and just opening it up to conversations and dialogues, comments, feedback. All of it is welcome.
So I'm going to, while people are thinking about their questions, and you're welcome to open your mic or put them in the chat, and I can actually relay them to Shivam if you prefer. Let me start with it. I'm super practical. So if I'm actually trying to negotiate a deal with a startup that I'm interested in, what kinds of very concrete deal terms should I be actually looking for on my term sheet? We Seattle Angel Conference often has a standard term sheet, but I don't know that. I'm going to go back and look at it to see, you know, what specifically we are looking at that fits in that sort of ESG bucket. And I'll warn you all that I'm saying this out loud, and I haven't talked to John Seacrest because he's the one who wrote the term sheet, but I have a passion to go back and look at it. But maybe you can help me on that discussion by giving me some suggestions. Shivam, if you actually stop sharing your slides with the thank you, we'll actually be able to see you a little bit better.
Just give me a second.
Yeah, thanks. Perfect. I get to see it. That's better.
Is that better now? Oh, brilliant. Yeah, I can see you all. Wow, I can see you all now. Amazing.
Yeah.
Fantastic.
Okay.
Not just my slide and my small little face in the corner there. So it's fantastic. I can see you. Excellent. Yeah, sorry. So I think, Elizabeth, that's a great question on term sheets. I think what I would, and I absolutely don't like doing this, but I'll have to follow up this with a question to you so I can get answer. But I think I found, again, very importantly, it needs to reflect. So the ESG considerations for the term sheets need, in my experience, vary quite a bit with the kind of organizations we're working with. So they can't be generic. That's the first thing. I think we can have considerations that are a bit more generic. So the environmental concerns, you can have GHG emissions, you can have things around, you know, water management. We can have things around how do we start to think about, you know, recycling and circularity so that they have a bit more impact. So we can have generic themes, same in societal, but the specificities very much need to come forward based on the entity that we're working with and their product, geography, and where they seek to have impact. So maybe if you have certain examples of what's currently an example of a term sheet would look like from your environmental standpoint, I can then maybe share what I have seen from a bit more specificity.
Well, the terms that we have are whether we often invest in a convertible note. So one is a debt equity thing, sorry, a debt note, not an equity. And we have a period of time that says, this is often 18 months, sometimes it's 2 years. And in that situation, we're actually putting some timelines on it. We're looking to see progress by the company, but we are not really dictating what metrics, perhaps other than financial return on the loan that we have actually provided, are we asking for? Because we believe the entrepreneurs are setting some of their outcome measures, but I think as an investor group, and I'll be interested because Catherine's done ESG investing, and so has, and I think Kristen maybe purchase-driven purchasing, but sort of some qualifications on the suppliers. Like there's metrics in there.
I can speak quickly to one example because that helps me quite a bit. So, and I would love to hear from Kristen and others that you just mentioned, but just to me quickly. So, as an example, we were in chats with one startup, and they're sort of working on this quick grocery delivery type model. This is in one of the emerging markets, in the Southeast Asian market. Now, so the term sheets classic, we have sort of the financial expectations over this sort of 20-month, 24-month time frame. And then also we sat down with the startup and really engaged them in the sense that from their perspective, what do they see as a societal impact of the work they're undertaking, right? And so we surfaced this conversation. Multiple things came out there. We can save sort of time for working moms, for example. If they don't have time to go get groceries after work, this is a benefit for them, blah, 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 blah. But then in this conversation, we started to think about, but what about the increased traffic congestion that happens as a result of multiple two-wheelers now being on the road trying to deliver groceries in the 15-minute time frame in an already congested, environmentally polluted environment? Right? What does that mean? And so through that process, we then started to have this conversation where, all right, the social impact could be, even though they start off with, let's say, a standard platform, is there a potential to tie up with other electric startups in the area that are working on electric two-wheelers and at least have some sort of an MOU that perhaps in the future they could have a sharing agreement? And that was just a basic sort of, just a conversation, just a starter, so that they can start to incorporate this mindset into their term sheet as a 20-month horizon, 24-month horizon. Where can they start off building those collaborative opportunities? So mitigating some of those societal concerns, as an example.
I think that is a very good example, that because it's very concrete, and I think that many people who might have actually jumped onto the Instacart bandwagon over the time that COVID was going on may actually have thought, does this, or even the Amazon's model of you can have your package today, you can have your second package tomorrow, and your third one on Thursday, then I think that makes sense. Sheila has a comment, and I'd like to, or a question perhaps.
Yes, kind of like both. Thank you for your presentation. I'm interested because recently, I guess technically I'm an ESG investor. I have some REITs that I specifically looked at their ESG stuff, and I was like, wow, ESG buildings. But then recently there was an article about ESGs buying up buildings like hospitals and other public type buildings that would change the, sort of economic outlook of these more public facing buildings. And then I was listening to your presentation and noticing that you had included human rights and ESG in one slide, and also then you mentioned something about ESG and inclusive society. And what you just described with a congested city ties back as well. So all those things are covered in SDGs. And I was just curious, is there any official or, because I've seen corporate social responsibility documentations that do combine ESG and they also use the SDGs for detail. But is there any way to, overlay them both so that you can actually see that big picture? Or is that too much detail and would capitalism collapse?
Yeah, that's an interesting one. I mean, I don't know if I might have the answers. Also, I want to clarify that. So this sort of, so the UN work on sustainable investment and so on is led by an amazing team that is not my team, but an amazing team. They're called the Principles for Responsible Banking or Principles for Responsible Investments. I feel like, I'm sure, an amazing group of individuals looking at this. But I think from my perspective, I do think that a lot of CSR reports or ESG reports that I've seen corporates undertake do in some way map to the SDGs, or SDGs at least serve as an inspiration to come up with the metrics that organizations use to define their ESGs. So in my slides, I mean, I had used human rights and inclusivity just to emphasize them more, but they are actually a part of the ESG framework. Human rights under the social and inclusivity also under the social, but also environment. I think increasingly, human rights is an environmental issue as much as it is a social issue.
Mhm.
So I guess my question simply is, why didn't you call them ESGs or SDGs?
I definitely could have said, because the reason why I didn't, and there's the difference that I draw, is SDGs are a non-measurable framework. SDGs offer us an inspiration of what an ideal society should strive towards if we are to create a society that is environmentally, socially, and economically equitable for all living beings on the planet. The ESG is a measurable rendition of SDGs, where ESG allows us to measure some of the goals that the SDGs want us to think about. So that's the way I sort of look at it, because SDGs, I mean, as I'm sure you're all aware, they're tough to measure in the sense that in a tangible standpoint. They offer us a framework, and they're a lovely framework, and that we all need to inspire to. But I think that's what they are, an inspiration.
Thank you for asking that question, Sheila, and drawing out a nuance that I actually hadn't quite picked up on at the very beginning. So that's very helpful. Catherine, I believe you said, and Jenny and had also been doing some investing in this area. Do you have some questions that you might like to ask? Or examples of where you see these metrics and holding in your terms companies accountable?
Well, I don't, if it's okay for me, of the two of us to speak now, on metrics for companies, it's more or less what party I would want to pay to give me advice on the best way to invest in ESGs. I've heard or read that there are many companies offering financial advice on how to be a good ESG investor, of what funds are best to invest in, things like that. But that many of them charge so much in fees that I could help the environment better, which is my main ESG focus, by, instead of investing that money in an ESG company or index fund, of sending that money to nonprofit organizations that are working on environmental issues, for instance. And so I don't know if that question is relevant to your topic today. And so I'll save it for another group if you don't want to take that on.
No, I'm happy to. In fact, Kathleen is doing exactly what I was just about to do, is go to my reference pile and find some resources of groups that actually work clearly to help on impact investing. Kathleen, I don't know if you belong to the Finance Impact Center, but you might put Stephanie Gripney's link in there too. And so these are all locations that actually have a little bit more of guidance on impact investing. And then there are some specific ones, for example, here in Seattle, that is E8, which actually has a focus on environmental, particularly companies, entrepreneurs, and you'll see them at the small startup phases where you can do a small investment on it. As opposed to join a fund with larger, you can actually select smaller investments. Now, in a whole, I'm just going to jump in on in a whole practice of angel investing, it's probably wise to, you know, how in a secondary market, you say, don't put all your stock in one type of company. So if you're investing in the smaller companies, then you might like to diversify and have, you know, if someone's tackling it from this perspective, you might like to give them a hand to be able to do that. And E8 actually allows you to do two things. They allow you to invest in individual companies, and they now have a fund, which actually is a pool that goes into other companies. And I can put E8 in here too.
Great. Thank you.
I think maybe, Catherine, also I'll share a document, but there's also the UN Finance Initiative, which is an amazing undertaking by yet another different team. The same team that sort of talks about the principles of responsible investments. They've put together a very, very interesting and a very informative framework that's open source for investors and for the financial ecosystem to start thinking about some of these things. I can just share that document with you all.
Great. Thank you.
That would be good. This is great for sharing documents. And in fact, actually, Kristan, I'm going to come to you and Reese just quite quickly. I just wanted to make one comment. Michael and I were talking about, you know, who is it that was likely to invest in his company? And, you know, there's other, it's an aquaculture environment. And so there are companies that specifically have an interest in supporting sustainable aqua activities like shellfish growing or fish preservation or alternate seaweed or seafood choices that might be protein based and not actual fish based. But so there's other companies that assist in that as well. Well, people are looking for those. I'll come. Kristan, would you like to make a comment or a question?
It's more of a comment. So I loved the, you know, ESG is measuring what we've done and SDG is where we want to go. And that's actually how we're using it in 17 Ways, a company that I am running. And the thing that I see is that, you know, most consumers, you know, it's really hard for them to sort of understand the ESG measures, but it's easy for them to understand the SDGs and that. So we're using it as kind of a communication of where I'm going. And, you know, back to what you were saying about term sheets, you know I was in SAC 21, so I know we invested in a technology company, and I would love to see things like, you know, that technology company, is there, you know, where their data is stored, are they using, you know, green energy for that? Because I learned a statistic that there's more environmental footprint from all of our data centers than there are from airplanes. It's just crazy to think about, right? So I would really love to see, you know, that kind of thing there. I also would like to see, you know, measures of inclusivity. You know, that company was led by a woman, but, you know, what about, you know, racial inclusivity or, you know, diverse thought and that sort of thing. So, you know, to me, those are some of the things that we as investors could ask for in our term sheet. And it wouldn't be that it had to be there right now, but it could be that they're working towards them.
I think just to quickly add to that, sorry, Elizabeth, go ahead.
No, Shivam, I wanted to turn it to you because you're the expert on this.
No, not the expert, please. Yeah, this is just something that I'm deeply passionate about. I think it always invites for a global conversation, but I do think, yeah, I would agree with Kristan. I think it's absolutely, I would agree. I would also like to see term sheets progress with it, but also just that fact on the SDGs, ESG again, that SDGs again, like, I love the fact that you're using them as a reference point and as a gold star, because that's really the way I've tended to look at them. As I mean, because they are very high level, right? For example, on the energy SDG, you might have things like by 2030 we want to reduce our reliance on X by X, and it's a very, very high level, very, very, very blanket statement. So it gives us a direction of where we need to go. But I think taking it down at a company level, it starts to become a bit more tangible. So I think that's that's great to hear.
Yes. Brees, could I ask if you'd like to open up your mic and make a comment?
Certainly, yeah, I have a question for the event here, the group. I'm wondering about positioning of a company in this regard to incorporation model. Certainly as a startup company, the best practice is incorporating as a C Corp in Delaware. And then you can do a certification system like B Corp or something like that. But I'm wondering, here in Washington State, we have the social purpose corporation. And I'm wondering, that's been problematic with investors in the past, that essentially if you have a triple bottom line, right, you're not as investable as if you have a single bottom line, right? So I'm wondering, is that changing? Is it, social purpose corporations, are they an option yet? Or do we still need to stick with the C Corp?
I'm going to give a comment on that, and then I actually will ask probably John to give you a stronger comment on that. So I would say that that I would actually think that people are making more and more of a shift to be, if you belong to Seattle Angel Conference and you're one of our companies, we're actually asking for you to be a C Corp. And that is actually for a reason. Michael, are you a C Corp?
Sorry, go ahead.
I just asked if you were a C Corp.
Yes.
Yeah. So that is one of the requirements when we actually make an investment in people, that we require it to be a C Corp. We've certainly had a lot of groups talk about whether or not there are alternate corporate models that we could consider. And that would be something that I'd have to ask John to clarify for you.
Great, thank you.
I think I would resonate a little bit, Cynthia. I think John can speak more intelligently on this. Just from my own personal experiences, I'm seeing it starting to shift a bit better. Where again, I think from a risk mitigation standpoint, more investors are starting to recognize that just because you're thinking about ESG or you're thinking about social and environmental impacts doesn't necessarily mean that you're compromising on the returns from a financial standpoint. In fact, it actually means that you might be yielding better financial returns in some aspects because you're better prepared for what risks might present themselves in the future. So I think that mindset, but I think it also boils down to how the narrative is presented to the investors, which I think is that cat and a mouse game, a bit of it, where if it's presented in a certain way that's digestible, in a language that's digestible, can incur a certain different outcome. I think my mom was the one who always used to say, it doesn't matter what you say, but how you say makes all the difference. I think so she was a big proponent of that conversation, but I think it's just drawing a similar sort of analogy. That's just my personal 2 cents on that.
I invest in things that I believe fit in the ESG sort of framework, but that's my choice when I actually have an investment thesis. So my investment thesis is I want to see companies that are actually doing a great job in the areas that I'm passionate about. And so it doesn't matter what kind of a structure they have. My expectation is that I actually am wanting to look at people who are doing that kind of thing. There's philanthropy, and then there's impact investing. And I do believe that a lot of philanthropic organizations don't necessarily have the financial returns because they're always going out to hand out money. And we need the companies to be sustainable. So they actually need to be operating in a corporately fiscal way, whether or not it's returning money for investors, but at least keeping the company moving forward operationally. Otherwise, it's just a startup that's failed. Other questions that people might be liking to ask about this. I wanted to ask, unless someone raises their hands right away, I want to ask Shivam, can you tell me how important is your mindset for the work that you're doing? I mean, you talked about being optimistic, but I'll just tell you that every once in a while, people might feel that this is a doom and gloom. It's such a momentous problem. And some people are actually feeling that we're behind the ball on this and we can't catch up. And so tell me about your mindset for this. It's clearly optimistic, but how do you get yourself geared up every day?
That's yeah, I think that's goes into I think personally, I think we as human beings are all products of our environment. I think our environment has a big impact on not how just we perceive our day-to-day life, but also how we perceive what is to come. And I think I've been in some ways lucky enough to have experienced life in very different ways. Like you're saying, growing up in South Africa is not the easiest thing to do, especially in apartheid South Africa. So I've seen sort of what the worst of humanity has to offer and the best. And I think if you look from that mindset, I think we've come a long way. Just the fact that me and you are having a conversation as partners, it's a huge thing for us to come forward. But I feel like also from an environmental standpoint and from a social standpoint, so that's from a more social standpoint, I see a lot of progress where I think people are connecting in ways that we haven't connected before. I was just recently, again, traveling to a certain part of Africa, and a friend, they've got a daughter, and she's in grade 3, and one of her best mates is actually in London, UK, and they met online and they're having this conversation, and she knows everything about London without ever being there, and vice versa. And kids today are really starting to blend a lot of these externalities that we as a society have come to take, as very real externalities. So I think we should create for better social outcomes. I think along racial lines, along color lines, along equity, financial lines, I think they'll start to get better. I think same along the environmental side. I see a lot of issues, but I see also a lot of people who are wanting to do things for the better. So for me, that's always my mindset is really, I think also we have to recognize that a lot of the way that we inform our thoughts, I've come to realize personally that a lot of the way we inform our thoughts is largely based on the data that we consume. And a lot of data that we consume is generated by algorithms that are meant to constantly feed us a certain kind of data that allows for us to stay on those platforms for a much longer time, which can create a very, very interesting reinforcement cycle, where we are only consuming data that is sort of based on not even particularly our interests, but what the algorithm wants us to see. And I feel like taking a bit more control of the kind of data and the kind of content and the kind of narratives we consume is quite important, because I think for every good story out there in the world, there is multiple better stories, but they might not get as much publicized as I would like them to be. So for me, I think focusing on those things is critically important as well. That's just my personal 2 cents. What keeps me optimistic.
Well, that's helpful. So if that's for you personally, what are the forcing functions that we need for others to be willing to make a change? I know you're trying to do some, well, the UN's language is actually trying to do a little bit more of a scorecard on how we're doing on some things, right?
So again, my team is not necessarily involved in the scorecard, because again, UN is such a massive entity and there's so much work happening. But so my team is directly, again, not, so I can't speak in that capacity. But yes, I think there is a certain sense. There's lots of interesting conversations happening within the UN and outside as well. I don't know if you're all familiar with the idea of a beyond GDP economy or a well-being economy. Or a circular economy, for instance. I think all these are starting to intersect in much better ways, where I think there's conversations on how do we need to reimagine what it means to be economically successful. Does it just mean that we've got a certain amount of cash in our bank accounts, or does it actually mean that we are better mentally, we are better physically, we are better in our societal relationships, things that matter and that feed us from a non-monetary standpoint. And so these conversations are starting to reimagine the very concepts of how we have come to accept what a functioning economy is. And I think these are important and very, very exciting discussions to be a part of. And I encourage you all, honestly, if you do have time, to please look into them, because they offer not just a sense of hope, if I could use that word, but a very tangible way of how each of us as citizens, as active individuals who care, could start to use our own independent, collective sort of thinking to inform some of these things for the better. So just some thoughts to share.
That's actually very helpful. And I'm just actually, I'm a big Googler. At some point, I was at the Microsoft campus and I said, am I supposed to be calling it something else when I'm here? And they said, oh, it's okay, you can say Google. But so I just actually found that the OECD did something on beyond GDP. And it's more, how do you actually look at metrics that are, I come from Canada, so I'm a little bit of a blended. We need to be supporting people who actually may have different skill sets and expertises and things like that. And so beyond GDP is kind of an interesting topic. I'm going to have to dive into it a little bit more.
It's absolutely fascinating. Beyond GDP, and same as circular economy. I mean, if you all get a chance taking a look at circular economy, particularly again for entrepreneurs that are working sort of with complicated supply chains, or that are working with complex supply chains. I think it's an incredibly powerful concept that is getting more and more popular. Again, OECD has done reports on it. The Wellbeing Alliance has done on it. It's a global body that's doing some tremendous work. Circularity is another entity. Yeah, it's the circular economy. Thank you. Yeah, that's great. That's exactly the organization. So.
Oh, good. Well, what we like to do is be able to share resources here. So if you have some additional ones, then please feel free to pop them into here. We had one person say that they had to leave, and so I just wanted to be sensitive to people's times. We All is another organization. Christiane, thanks for putting that one in as well here.
Shivam, I had a quick question for you.
Yeah, please.
Thanks, Nick.
You're a wonderful storyteller, by the way, and I would love to hear if you have any stories about some example companies that have fit in these guidelines that you've laid out. I'm a founder, and maybe aspirationally it would be helpful to hear about any examples of companies that you would have invested in or that you've heard of that fit within in either the ESGs.
One example, I spoke to this wonderful, and again, now I think a lot of this conversation, just to preface, is outside my professional UN hat. This is more of a personal undertaking and that I'm just sharing. So just to be very, very clear. But one example that I could really share. So I met this wonderful human being. I was in Stockholm giving a talk at Stockholm Plus 15. And I was hosting a panel as well. And one of the panelists was this lady, and she is running an organization out of Germany called Plan A. And Plan A they're a tech startup. And what they're trying to do is they're trying to basically, through an intelligent use of software, supporting large enterprises, very tangibly tie in their ESG strategy, metrics, and outcomes. So that you go into an enterprise organization, and a lot of times incorporating ESG can be a bit tricky. And reporting them and measuring them can be even trickier. So this organization is offering a software type solution to do that. And if you look at sort of very, very clearly, if you just go on the website, and I can send the link after.
I got it.
Yeah, an amazing, wonderful human being, and an incredibly amazing sort of entity as an organization. What they're trying to. If you go to their website, very clearly, you can right away tell what their societal impact is. You can very clearly tell what the environmental impact is and what they mean as an organization, whether that's from a diversity lens, gender lens, emissions lens. And so they're very smartly incorporated ESG metrics within their own fundamental ways of operating. And they've been quite successful. They've recently closed a round as well. Done really well in Europe. They're getting a lot of traction. That's just one example that I can think of. In the local Vancouver ecosystem, we've got a couple of really good examples as well. I don't know if you've heard of Chop Value. Chop Value is another, it's a local company, again, very, very cool company. They basically, bunch of guys, really, they thought that, hey, we all like using chopsticks, and a lot of them get wasted. And so they started taking chopsticks and making furniture out of them. And hence why it's called Chop Value. And now they've sort of scaled all across. They started in Vancouver, they've got an office in Singapore now, and they're scaling even more. And it's, again, nothing from an innovation standpoint. It's not like, oh my goodness, it's like carbon capture, or it's not a technologically innovative idea, but it's a societally innovative idea. So it's having great impact on the environment, of course, because it's enabling the idea of circularity. Again, if you look at their social governance as well, they're very, very clear and open on pay equity and gender equity, and making sure that they preserve sort of that overall ESG mindset, and how, again, good organization, doing well, sort of scaling through. Just a couple of high-level things, but there are so many. Honestly, Nick, there's so many good examples that are out there. I'm sure others will have many good examples too.
Yeah, I'd like to know more of those, or a Google search term for it, because I can tell just from the chopsticks thing that it's a great proof of concept that shows how you take really cheap things and still make an impact on improving the environment and mitigating climate change. So what Google search term would you recommend?
I just put in the website for Chop Value.
Yeah, I saw
so
that.
When I look for these companies, I'm just looking for, like, I always say sort of sustainable tech startups, or regenerative tech startups, or startups with strong ESG sort of mandates, and you can get access to some really cool sorts of organizations that way. There's also a couple of really interesting incubators, you can call them, or startup facilitators across the world that are working with startups that have a more ESG centered mindset to help them grow and scale and get access to capital that otherwise might not be unlocked for them. Again, for a Vancouver ecosystem, Spring is one such facilitator. They're amazing, like he's a friend, and it's just an incredible human being again, and I think it's a lovely entity just to take a look at.
Okay, thanks.
So one of the things that's useful, if these technologies are new, this is just a suggestion. I don't know how far along you are on the evaluation or analysis of these, but one of the things that we often suggest as part of our program is that people actually do that discussion with others who have some knowledge that might be able to contribute. So what sounds like it might be a super great idea, if you had a little bit more of a piece of knowledge about it, you might say, oh, but implementing that, or that's going to be more difficult, or it actually may be that it doesn't quite flow as quickly. And so it might be fun. You might find that actually working with a group to do deal flow screening, that's what we would call it, is we'd make a call and say, let's look out for all these ESG companies that seem interesting, recognizing that not everybody comes up in a Google search, because if you're working with, for example, a student in the mechanical engineering department at the university who has this great idea, but they haven't yet got to the point where they have formulated it and incorporated it and things, they still need help at the really early stages. And that's where, when I started the whole thing today, I said, you've got mentor capital and patient capital as well as financial capital, right? So that you're actually bringing forward some ideas. And you could become just a suggestion, if you're interested, you could actually become a mentor for a group that has this kind of a focus. For example, the mechanical engineering department at the university has a group that actually is doing new health medical device development, and the teams are really new, but they have to figure out how this idea is really helpful, and can it then become a more sustainable idea. So they have mentors, and so we could talk offline, and we could see about finding you a group where you could actually be a mentor. Then you get exposure to some of these early deals, and you get to have the discussion with other people who sort of know about them. Oh, is that a reasonable technology, or maybe it's not? And that might be assistive for you in your, and there are other people on this call who could offer those things as well.
I would, yeah, strongly resonate with that as well.
So I put in your friend's spring accelerator in here, and depending where people are geographically, or which really to me is such a narrow definition these days, because I think we're all globally connected. Like, we're doing this as if Shivam was just across the table, right? And he's really about a 2.5-hour drive. And maybe if you do the border, a little bit longer these days away, but it would be just as easy for us to be having this conversation across the country.
Certainly. I think I just have a quick, sorry, Reese, you were saying that am I pronouncing your name correctly? Please correct me if it's not right.
Reese is correct, yes.
Yeah.
Reese, perfect. I think just on the built environment, actually, if I can just spare a couple of moments to share something. So my ex worked with the city, I was with the city of Vancouver, with the Economic Commission of the city. And again, there's a group of really amazing and intelligent individuals who are doing a complete focus on supporting the greening of the built environment in the city. Because Vancouver has some of the most progressive green built environmental regulations that are popping up. And so that is very sort of really put forward a narrative where the Economic Commission came together and said, we need to really look at what the economic opportunity is to encourage more investment in the green building infrastructure and the ecosystem. And they put out an entire report around it, highlighting the economic opportunity and where do we need investments. I feel like given the geographical proximity, it might not be a very different narrative in the Seattle area. And so it might be a very interesting report for you to look at. And also, if interested, let me know, I can connect you to them, because, you know, the Cascadia conversation or the sort of Vancouver, Seattle collaborative conversation has been ongoing for a while. I think this might be a good way to materialize that collaborative effort, where two cities collectively come together, especially if you're starting to think of a dedicated incubator or a way to sort of support investments in that area. It could be an interesting thing to consider. Just something for you to sort of, you know, note.
Yeah, I appreciate that. And just to make a correction, I do work in Seattle a lot, but I'm actually based in Bellingham. So positioning ourselves for Vancouver, Seattle collaboration is key to our strategy.
Yeah, so please, yeah, take a look at I think it's called the Vancouver Economic Commission. And if you say built environment, it should be the first sort of report that pops up. And if you can't, then I can find it. And if you are interested in talking to them or connecting with them, just shoot an email to me.
I'll absolutely check it out. Thank you.
I'm going to give you a reference for and also another organization that has green communities and building design. And if you ever decide you want to talk to my son, he's actually in the Netherlands doing an education program in engineering. And there's no question that the Netherlands have been very proactive in the building redesign. And he's just young, but he might actually have some references that might be helpful for you. So I'll throw him under a bus there.
Sounds good. Thanks.
So, okay, I want to make sure, are there other suggestions? We talked some building things. We talked about companies. Is there something else that's pressing that people want to ask a little bit about?
I think it's probably the lunchtime silence speaking. I think that's what it is. I think it's about time. People are like, yeah, it's post lunch, it's coffee time or tea time and a walk time. I think that's what the silence tells me.
Well, I want to a big round of applause, and we've got our emotions, or we can to say thank you so much, Shivam, for being willing to come and talk to us today, and the sharing of the resources and the stimulation that is actually provided for other people to be connected. And so we do appreciate your time. I know you've got many initiatives that you're working on, and I'm super thankful that we were able to have this conversation today. So We will do a editing of this somewhat and put it up on our YouTube channel so that other people can get the benefits of some of these connections that we've been making suggestions. If you have other resources that you might have afterwards that you'd like me to put inside that, that would be just great.
Amazing. Thank you. Yeah, please do. And like I said, if people are, please feel welcome to connect with me over email if there's any questions, if there's any other sort of further insights I can share. I'm very happy to do that.
I did put your LinkedIn profile in here, so
Amazing.
that's very kind of you to be able to offer that to others. And so we'll hope that that will work for everybody. All right. Thank you for your time. I'll let you off to enjoy that very lovely invest in farmers. Yes, actually, I do it through acres. Michael. Yeah. And through my company. And
True. While we were talking, I filtered 1.5 million gallons of water. I don't know what you guys did.
Right.
okay, that's pretty amazing.
That's the mic drop moment right there. Nothing can be said after that.